Okay, this is a very interesting video that I wanted to share with a lot of people because a lot of people think, that the rising interest rates are scaring everybody off. There are some people that are concerned, but what I really wanted to show is the history of interest rates from 1980 until now, this year, 2023. So the evolution of home interest rates, quite dramatic. If you go all the way back to 1980, interest rates were quite a bit higher than they are right now. The housing market has always come back. There's always things that are selling. Even now, with the rates where they're at, they're higher than they've been in a while. But when you compare it to the last 40 or so years, um, they're dramatically lower still than what they used to be. Go back to the 1980s. Here, early 1980s, home loan interests reached staggering heights with an average 30-year fixed rate mortgage peaking at around 18.5%. Can you imagine that? This is in the 1980s when Ronald Reagan was president and people thought the economy was doing phenomenal. Slide 3. As inflation began to subside, interest rates gradually declined to the late 1980s and early 1990s. By the early 1990s, a 30-year fixed rate, they were in the 8% to 9% range. Compare that to where they're at still today. And most people don't think they're going to go substantially higher. They may go a little bit higher, but to go up to where they were before doesn't seem like that's going to happen. So here we go. Mid to late 1990s, the rates continued to decline. Interest rates continued to trend downward. By the late 1990s, a 30-year fixed rate was in the 6 to 7% range. Okay, that started attracting more home buyers. So that's around where it's at now. And then in the early 2000s, they saw historic lows in mortgage interest rates, with rates dipping below 6% for 30-year fixed rate mortgages. This period contributed to a housing boom and increased home ownership rates. And then in the mid to late 2000s, mortgage rates started to rise again in the mid 2000s, but remained moderate. However, the subprime mortgage crisis and the ensuing financial crisis caused interest rates to drop significantly as Federal Reserve implemented policies to stimulate the economy. Many people are aware of the fact that there was a big housing market crash that happened in late 2007 going into 2008. Everything was overpriced. Things took a big dive. The whole economy took a big beating. And because of that, that made the Federal Reserve lower interest rates again to re-stimulate the housing market. And so from around 2010 until 2020, interest rates were very low and they kept getting lower. So here, mortgage rates hit the historic low of below 4% in some cases. Okay, mid 2010 to early 2020, gradual rise in stability. As the economy recovered from the financial crisis, interest rates began to rise gradually but remained relatively low. Mortgage rates fluctuated but generally stayed in the 3% to 5% range for 30-year fixed rate mortgages. So, the history of home loan interest rates from 1980 to 2023 reflects the dynamic nature of the housing market and the broader economy. These rates have played a significant role in shaping home ownership trends and access to housing over the years. Even despite everything that people are seeing going on, the rates are still, compared to where they were many times in these 40-year periods, are still rather low from where they were before. And I'm in Florida. We're dealing with a shortage on a lot of houses down here because we have people moving in from all over the world. So if you're holding off on getting a house because you're waiting for the rates to drop, that may not always be the best decision. And I also work with mortgage lenders, and there are definitely some mortgage lenders that can help you. If you're interested in talking to me, I can put you in touch with some lenders. I live out here by Disney. If you're looking for any new homes out in this area, I'd be a perfect guy to help you with any of that. Also, if you're looking to sell your house, I can certainly handle that as well. So anyway, I just wanted to make this short video so people can see where the rates are and where they were. I was actually pretty shocked myself because I keep seeing the rates going up and I hear all this negativity, people saying, oh, I can't believe they're this high. But in comparison to where they were before, it's really not that bad. And most people that are in this industry think that at some point here, it's going to end up coming back down again. So you can always buy a house and refinance when they come back down. The price of houses doesn't go down, not much. If it does, it's for a short period of time, and usually they come back, just like what happened in 2007 and 8 when the market took a big dive. I actually bought a house that was worth about $280,000. In 2007, it crashed, went down to 142, and then right now it's worth probably 450,000. So that's a short period of time to see a big increase, especially here in Florida with the high influx of people moving in from all over the world. These prices are not going to stay down. So anyway, get a hold of me. I'd love to be able to help you out.